Yo, what's going on, family? Hope everyone's having a fantastic day today. What this video is for, it's going to give you basically this is a pocket option 101 video, right? We're going to go over what indicators, how to access them in pocket option, how to access the different tools that are in pocket option to properly do analysis, how to mark up your charts to a certain extent. And then also what I'm going to do is I'm going to show you guys my strategy that I use. And this strategy, if I'm being completely honest with you guys, is 95% accurate. This strategy has allowed me on some days to be 10-0, 12-0, 15-1, whatever the case may be, right? This strategy is 95% accurate. And the only reason why I don't say it's 100% accurate is because of the fact that that 5% leaves a little room for if you're emotional about your trade, right? I want to make this very clear to you guys. This strategy does not work if you're emotional about your trade. A quick tip: the money that you're putting in pocket option right now, I need you to have the mindset that you may lose all of it. Okay. And that's just the reality of the fact. Now, most people, they won't tell you this when you first start trading, but I'm very realistic with you guys. The money that you're putting in pocket option, you need to be okay with losing that $50 or that $100 or however much you put in. Right. And the reason why you need to be okay with that is not because that's going to happen, but because that's the mindset you need. And when you have that mindset and you just are focused on the strategy that I will implement and that I will show you guys through this video, then you will be able to be a lot more successful in trading high frequency Forex. Okay. So before we get started, right, I want to go ahead and show you guys my screen and go through with you guys the basics of pocket option. Okay. Let's get that out of the way. There you go. All right, cool. So I'm in my demo account right now, right? In my demo account, I have $600, right? When you first set up your pocket option, it's going to ask you for a username, or it might just ask you for an email. Okay. Now, something you guys need to understand is that you will start out trading in your demo account for probably your first week. That's your safest bet, right? Starting your demo account for about a week. And then once, depending upon how you feel after that week, then you go from there, right? Do not rush this process. If you are uncomfortable and don't trust yourself enough to be able to trade HFX, do not do it, okay? Now, with all that being said, this is Pocket Option, right? Pocket Option is a broker that most people start out using, right? It has a minimum of $50 that you have to put into it. And that's basically about it, For most beginners, they start on this. It's very easy interface to understand. Most people, if they start with pocket option because they only have $50, if you have, let's say, $200 or $250 or anything above that you're willing to put into a trading account, I highly recommend using Race Option or IQSend. IQSend is really good. And there's a bunch of other different brokers out there that you can, do more research on. But today we are going to focus on pocket option. Now, for pocket option, in the top left-hand corner, you're going to have your currency pairs. To access all the currency pairs, you're just going to click on this top left-hand corner, and these are all the currency pairs that are currently being, traded at this moment in time. They all change in payout percentages, which is how much money you'll receive in profit per dollar that you put into the trade. And as a rule of thumb, don't trade anything less than 70%, right? So in this example, if it's less than 70%, don't trade it, because that means for every dollar you'll trade, if it's a 50% payout, you'll get 50 cents per dollar, which in the grand scheme of life isn't really worth it. I'm risking $1 to get half of it back. I don't really want to do that, right? So the only currency pairs that you really want to focus on is anything above 70%, okay? And there's different sections up here as well. So there's currencies right here. It shows you all your different currencies. Here are commodities. This includes gold, silver, oil, anything like that. And there's also stocks too. So if you want to trade a couple stocks like Apple, American Express, Boeing, whatever the case may be, right? There are payouts all over here, right? Now, usually, obviously, we don't trade stocks. We trade currencies. That's really what we focus on. So that's really about it for the most part. Rule of thumb, also, whenever you see next to the currency pairs is OTC. OTC means over the counter. Basically, what that means is that you're trading a currency that's not technically open, right? Now, obviously, this is the foreign exchange market. The foreign exchange market is open 24/7, technically speaking, right? But there are prime trading hours, and that's during the London session, the New York session, and the Tokyo session. Now, all of these sessions kind of intertwine with each other, and, one session will kind of go lead into another one, and so on and so forth, right? But for this currency, for example, USD Ruby, right? It's going to be over the counter, Okay. Now, what that means is that this is what I like to call market money. That means if you were to trade this currency, this strategy may not be as suitable for this currency pair right now because the market is really being determined by the brokers. Because at the end of the day, you're a Forex trader. You are stealing from the banks legally, right? Now, this is their money. They don't want to be stolen. They don't want to be stolen from, they don't want to be messed with. So when you are trading currency pairs that end in OTC, just know this strategy may not be as effective as it would be if OTC is not there. For example, like Euro JPY, right? This strategy will work, but not as well if it's a over-the-counter pair at that moment in time. Okay, so to the left, obviously, is your currency pairs. Now, one more over, this is basically, it shows you your chart types, your time frames, where you want it to be at. If you want to enable auto scroll, which literally means that, if I'm over here, for example, and when I enable auto scroll, that means by the next candle, it would automatically put me back in frame for me to be able to see what's happening with the market currently at that moment. You can turn it on, you can turn it off. It's totally up to you. Grid snap, you could turn that on, turn that off. Doesn't really do too much and everything of that nature. Time frames, you can look at the market from as little as 5 seconds. You can see how it moves within 5 seconds. That's how quick high frequency Forex is. You can view it from 5 seconds, or you can view it as long as the day, right? It's totally up to you as to how you want to do it. Change your chart types, Hikanashi, bars, candles, line, area, whatever the case may be. It's all up to you. Now, next to that, we have where your indicators are. Now, as a good rule of thumb, for this strategy to work, here are the indicators that you will need to have on your pocket option, okay? The first one is going to be Bollinger Bands, all right? And now to add an indicator, what you're going to do is you're just going to click on it, right? So for example, here's his Bollinger Bands. I click on it, guess what? Boom, now it's added to my chart. If I want to take it off, all I do is go to where it says Bollinger Bands, click on that X, and it goes away, okay? But for this strategy, we're going to add Bollinger Bands. We're going to add RSI. We're going to add Stochastic. And we're going to add Parabolics. Okay? So you can star them. You can just press on them. Doesn't really matter, right? So this is what your chart should look like at this point in time, okay? Now, to further explain this strategy, what you want to do is make sure you guys are taking notes, okay? I want you just to genuinely understand what this strategy does, how it works, and everything like that. Because I'm telling you, this is 95% accurate. This will make you as much money as you possibly want, and you can potentially trade all day, right? There have been some times where I've traded for 4 hours straight, and I was just making money left and right, left and right, left and right, okay? So this strategy does work when used properly, all right? So with that being said, the first thing you want to look at in this market is how it's moving, right? The market moves 3 ways in the foreign exchange market. There's an uptrend, consolidation, and downtrend, okay? You don't want to trade a currency pair that's in a deep uptrend or a deep downtrend. You don't want to do that because you know that it's just going to keep going up, right? You know that it doesn't matter what you do, right? The most you might catch is maybe a candle, right? But for the strategy to work, you also want to be in a 2-minute interval, okay? So I'll explain very quickly what this is down here, right? If you believe the market's going to go up, right? I'm sure you guys should already know this by this point in time. But if you don't, if you believe the market's going to go up, right, you will press this green button. If you believe the market's going to go down, you will press the red button. That's simple. Red button is for a sell or put, and then green button is for a buy or a call, okay? And here is the strike price, which means that this is the current price of this currency pair. This is how much it currently is at right now. And then above the buy and the sell will be your profit, will be how much you earn in addition to what you initially invested for this currency pair, right? So in total, for this example, I'm going to trade $20. So I'll put in $20, and then if I'm correct in my prediction, I'll earn $16 as well as my $20 back. So in total, I'll be $36 in profit, okay? That's basically how it works, right? Now here it says purchase time, okay? This, you need to understand, this is all about timing. For this strategy to work, you need to time it properly and effectively. Okay, so we want to be in the 2-minute, we want to have a 2-minute timer going on. We don't want to have a 1 minute, we don't want to have a 3 minute. We want to be in a 2-minute trade for this to work. Okay, the first minute is to allow the market to breathe. The second minute is for it to move in the direction you want it to go into. Okay, That's basically how this strategy works. Now, to break down the strategy with you guys, we want to look at overall what direction is moving in: uptrend, downtrend, consolidation. Okay. Right now, we are in a bit of a consolidation. Okay. It was on an uptrend from down here all the way up here. This market was in an uptrend. Okay. Now it is consolidating. Now it's kind of staying within its range. It's going up, it's going down. It's staying within the Bollinger Bands for the most part. Right. So does this strategy work in consolidations? Yes. Does this strategy work in uptrends? Yes. Does it work in downtrends? Yes. It does work in trends. However, if it's very severe, don't touch it. Just leave it alone. Okay. If it's like a minor uptrend, maybe like up here, for example, you can trade in that, right? But if it's like this, don't touch it. Just let it do its little uptrend. Let's do its thing and then go from there. Okay. Because we don't want you losing money if you're in a trend, right? So the first thing you want to look at is how the market is moving. Second thing you want to look at is if the candles are outside of the Bollinger Bands. Think of the Bollinger Bands as, I like to think of it as like lanes of traffic, right? So, right, the traffic is the market, okay? The market wants to stay within its lane, right? Because think about it. If you're driving a car and you swerve or drift a little bit into the next lane, what happens? You get beeped at. Like, yo, what are you doing? Stay in your lane, right? The foreign exchange market works the exact same way. It wants to stay within its lane, but sometimes it swerves. Sometimes it goes to a little bit to the left. Sometimes it goes a little bit to the right. Whenever it goes a little bit too much to the left, or in this example, let's say that this candle right here, right, goes outside of its lane, okay? Just know that eventually it will need to go back in its lane, okay? So let's look at this candle specifically right here, right? In this example, we're gonna talk about what to do when you're selling this currency, when the best time to sell a currency pair is, and then we'll go over when's the best time to buy, right? They're very similar. It's a very easy process to understand, okay? So the first thing you wanna look at is this candle. Is the candle outside of the Bollinger Bands, right? If the answer is yes, that's one confirmation, okay? For this strategy to work, you wanna have more than three plus confirmations, okay? And the way that it works is that the more confirmations you have, the more solidified the trade is, and the more of a probability that you'll have in winning that specific trade, okay? So for this example, right? Okay, so that was just auto scroll. So let me go ahead and go back. Let me turn auto scroll off for this video. What am I doing? There you go. Enable auto scroll, turn that off. Okay, so let's look at this currency pair, for example, right? So in this candle right here, it went outside of the Bollinger Bands, okay? That's telling me it's overbought. It's outside of its lane. When a candle is really green like that and it's outside of the Bollinger Bands, it's overbought, okay? So that's my first confirmation. It's outside of the Bollinger Bands. It's looking okay. I am starting to look at this currency pair now. The second thing you want to look at is your RSI. Look at your indicators. This is an indicator-based strategy, okay? It's very, very simple, but it works very, very effectively, okay? So look at your RSI, right? Your RSI will have a range of high is going to be 70% and the low is going to be 30%, okay? When the market is above that 70% mark, that's your second confirmation of, okay, all right, that means this market's really overbought. So that's letting me know that eventually it is going to sell, or I'm looking for a sell at this point in time. It's overbought. A lot of people are buying it. Okay, and for the third confirmation, you're gonna look at your stochastic oscillator. Now, your stochastic is basically going to somewhat mimic your RSI to some extent. Okay, that is your third confirmation if your stochastic oscillator is above this 80% mark. Okay, the oscillator has a range of 80% and as low as 20%, right? So when we're looking for a sell, we want to look at if the candle is above the Bollinger Bands, number one. Number two, we want to look at if the RSI is above the 70 mark. Number three, we want to look at if the oscillator is above the 80% mark as well. Those are your three confirmations, okay? That means that, okay, great, this market's definitely going to sell soon. I just need a couple more confirmations before I actually hop into the trade, right? If you just hop into a trade based on those three confirmations, you are probably maybe on a good day, 65% accurate. 65, I want to say, right? I don't even want to give it any more than that, right? And the reason why that's the case is because maybe an uptrend could be starting, right? Maybe you're right. If you look at these three candles, they've all been green, right? So it could keep going up. You do not know that. That's why I say it's 60%, 65% accurate, right? That's why you need 3 plus more confirmations. So that way you can turn that 60% into 90 or 95%, okay? So as an additional confirmation, we want to look to see, we want to, for a sell, right? We want the RSI to not only be above the 70% mark, but we also want it to come back down and cross back the 70% mark, right? So in this example, right, the RSI started here. Okay, let's look at this little, let me go ahead, let me get a little rectangle so that way I can show you guys what to focus on, right? Let's look at this example right here. Let's look at these candles, okay? I'll do one more example for you guys also, just so that way we have something else to look at, okay? So if we look at the RSI, right, we see that the RSI is down here, kind of like in the middle area, right? If the RSI is in the middle, that means it's not really going anywhere. That means like the market's moving normally, right? It's not going up, it's not going down. I'm not going to trade it, okay? But we see how it's starting to rise, and it's continuing to rise, it's continuing to rise, and it's continuing to rise, and then it breaks the 70 mark. As soon as it breaks the 70 mark, that's letting me know that, okay, it's really overbought right now. So that I'm looking for sells, okay? So now that it's overbought, right, which is at this candle right here, okay, I want to see, right, if it's going to go back down and re-break this 70 area. Because if it does, then I know that the market's going to go back down. Okay, so let me zoom out for you guys a little bit, right? Okay, you see it right here also too. This is another great example, right? But look, the RSI crossed up this 70 mark, right? Stopped right here at this same candle, right? So if you were watching this real time, you would watch this candle. You'd see how it would operate. Okay, you would say like, okay, what is it going to look like? How is this going to react, right? And then from there, the next candle appeared, and the RSI touched again this 70 area, right? It touched it one more time. So it went up, broke it the first time, and then came back, and it's breaking it the second time. The moment you see that, that's your fourth additional confirmation, right? At that point, you're like, okay, this is looking pretty good, right? Now, again, like I said before, the RSI, the oscillator mimics the RSI. So if we look at a stochastic, right, these two lines cross. Now, these two lines represent the buying power and the selling power of the current market. A better way to put it is it's representing what's happening right now. Is the market being overbought or oversold, right? So a good rule of thumb that I use is that if the blue line, which represents the market being bought, is below the red line, which represents the market being sold, right, then the market's overall going to go in for a sell, right? Now, you can see right here, these two lines cross. Whenever the stochastic oscillator, whenever the blue line and the red line cross, just know that a major shift in the market is going to happen, okay? That means that the market could either go up or it could go down, right? So right here, this blue line is above the red line, okay? So that's letting me know that this market's still being bought, right? But remember, when the RSI came back and touched this 70 mark, those two lines crossed. Now, when those two lines cross, immediately go for a sell. That's your fifth confirmation, right? If you have 5 confirmations, you're set, you're ready to go for a sell, okay? For a 2-minute sell, right? When these two lines cross, like I said, that means a major shift in the market is going to happen, right? Now, at this point, the red, you can see it very faintly here, but the blue line is now below this red line. The red line is overpowering the sell. There's more of a sell occurring right now than there is a buy. And so because of that, it's showing you right here that the red line is above the blue line, okay? So those are your confirmations. Now, I hope you guys took notes on that because that's very, very important. That's a very key element in this strategy for it to work, right? Once you see that happening, okay, you can immediately go in for a sell. Now, if you went in for a sell in this candle, you went in for a 2-minute sell, guess what? You would have won that trade at that point in time, Okay, you would have definitely won it, right? Because you hop in here, that's 1 minute, that's 2 minute. You're definitely way below your entry point. You're good to go. That's a beautiful example of a sell. Okay, and if you look back over here, right? If you look back, let's do this one. Let's do this one, for example, right? So let me take this rectangle, right? And let me go, where should I go? Let's go right here, for example, right? Let's look at this little area, okay? So same thing happened in this area, right? Let's look at this candle. This candle, one, outside of the Bollinger Bands. Okay, that's a good indicator, right? Two, let me look at my RSI. If your RSI is not above this 70 mark, don't touch it. Leave it alone. Don't touch it. Okay. So if your RSI is above this 70 mark and you see it crossing over, like especially up here where it's pretty high, okay, cool. That's my second confirmation. My third confirmation, does the stochastic look the exact same as the RSI? If it does not, don't touch it. Don't touch it. Right? They all need to be aligned with each other. They all need to be they all need to be identical. If they're identical, go ahead and trade it. Right? So right now, you see in this specific candle, it's a green candle. It's very, very thin, which is letting me know that a major change in the market is going to happen too. That means it's having a hard time going up for that buy or continuing to buy because the candle is still very, very slim. Okay. So one, the candle's above the Bollinger Bands. That's my one confirmation. Two, is the RSI above the 70 mark? It is. Cool. That's my second confirmation. Three, does the stochastic look the exact same as the RSI? Are they both above their respective ranges? Yes. Okay, cool. That's my third confirmation. Now, here's number four. Okay, number four is the RSI coming back down and hitting, right, the or crossing back down into its range or crossing back down the 70 mark? If the answer is yes, going for a sell, right? That's four. Five is if these two lines are crossing, right? Look at this beautiful example again, okay? It was outside of the Bollinger Bands. RSI was very high, and the stochastic looked pretty good. The RSI crossed back down the 70 mark. Both of these lines crossed, and guess what? Because of that, the next candle was red. Right now, in this situation, the market, if you would have hopped into a 2-minute sell, you would have closed, right? It would have been a little bit tight because, the next candle was initially green, but the strategy still works. If you would have hopped into this candle, you would have won this 2-minute sell. Okay, so that is overall the strategies. It's very important to be patient with this strategy. If you're not patient with the strategy, I promise you, you will not be successful in this process at all. Okay, you will not be successful in trading high frequency forex. Right now, a couple things that I want to show you guys. Okay, a couple things to be aware of. Right, is I want you to be aware of fake outs. Right, so you could have something that looks like a potential buy, but if it does not, right, or so it looked like a potential buy, but it's possible that it could not go the way that you wanted to, right? Like here, for example, right? You see a lot of different fake outs, right? You see the blue, it went up, but it didn't cross, went back down, went up a little bit, and then it went up and down in this area before it actually crossed the stochastic, right? That's why it's very important to be patient. You might see a couple of fake outs, so be aware of that, okay? So let's go ahead and let's look at a potential buy. Let's look at a buy, for example, right? This is what you need to look for a buy. It's literally the same thing as looking for a sell, just vice versa, okay? But so that way I can go ahead and explain this to you guys. Let's look at these two candles right here, okay? Let's look at these two candles right here, right? Boom, okay. So we see that the market is right now kind of not in a downtrend, but the market is pushing down, right? Now in this candle, we see that the market went down a lot. It's really, really outside of the Bollinger Bands, okay? Guess what? That's our first confirmation, okay? Our second confirmation is the RSI really low? Yes, it did. It peaked right down here. It passed its, at least its low, which is this 30% mark. It passed it. Okay, it's really, really low. That means that it's being oversold. People are selling too much of this, so I'm going to be looking for buys. Okay. Now, third confirmation is, does the stochastic look the same? And in this example, yes, the stochastic oscillator is way past the 20% mark. Okay. So that's letting me know that I'm looking for sells. Now, again, confirmation number 4, right? Usually you get confirmations 4 and 5 roughly after, or roughly when the next candle is produced. And you see it immediately. That's why when you're going to hop into a buy or sell, hop into it immediately as soon as that next candle produces, because then at that point, you'll be at a sniper entry. So if you're correct, if you get it all the way down here, guess what? You're deep in profits. You don't have to worry about a single thing, right? That's the beautiful thing about this strategy too. We want sniper entries. You get a sniper entry, you don't have to worry about it. You can sit back, look at another currency, go on your phone, text whoever you got to text, and go from there. Okay. So let's for buys, right? This candle was really outside of the Bollinger Band, right? It sold a lot. Okay. We saw that the RSI was also very, very low, past the 30 mark. Confirmation number 2. Confirmation number 3, the oscillator is also really, really low. Okay. So those are 3 confirmations: 1, 2, and 3. Now, confirmation number 4 is, does the RSI cross back up this 30 mark? If it does, that's my 4th confirmation. Okay. And 5th confirmation, are the stochastic lines crossing? Does this blue line cross back up above the red line? If your answer is yes, that's 5 confirmations, and you are good to go for a buy. Okay, you see how that works? It's a very simple strategy to understand, right? All it takes is patience, and all it takes is for you to master this strategy. If you master this strategy, you will be successful in HFX trading very, very quickly. Okay, and trading to you will become very, very easy, right? The trading, for the most part, is about 90% mental, right? You might ask yourself, oh, this is such an easy strategy, why aren't people making hundreds of thousands of dollars off of it? It's because it's all mental at the end of the day, right? But for the most part, that is the strategy. Okay. If you're new and you need extra help with the strategy, first, I want to say thank you again. Welcome to the team. We really do appreciate you for hopping on and taking the leap of faith to financial freedom. Right now, if you need extra help with this strategy, again, there is a go live schedule, a trading schedule that you can follow. Make sure you implement that with your schedule. If you work or if you don't work, or if you got to take care of people, whatever the case may be, make sure you properly understand. If you have any questions, comments, or concerns, please reach out to whoever sent you this video, whoever directed you to this video, and they will be able to help you and answer any questions you may have. Okay. But for the most part, that's really about it for this strategy. I hope you guys have a fantastic day. Thank you so much for hopping on. This is Juice signing off.